Good day, students. Welcome back. This is Dr. Claudia Mercado, and in today's lecture, we are going to be covering some content from Chapter 12, which deals with special journals. This is Accounting 1303, Introduction to Accounting 1, and we are using the 24th edition, College Accounting Chapters 1 through 27 textbook. A friendly reminder, like I do every week, please make sure that you read the chapter. Do not skip that step. It is critical that you read so you can be aware of the information that is presented. That way, when you get to the point of actually working on your homework assignments, whether it be the study plan or the homework, you are aware of the content. Reading is critical. Okay, so I've selected a problem from this chapter that deals with a sales journal. So I'm going to be focusing on that. Make sure that you read the entire chapter. There's a lot of examples included. On Cengage, there's Show Me How videos that will help you complete some of your homework. So let's move on to what a sales journal is. Okay? So a sales journal is basically a special type of journal that is used to record only sales of merchandise on account. And that is the key word. Sales on account. So if you make a sale on account, you are expected to receive money from the people that are buying the stuff from you. Okay, so we need to be able to keep track of what is owed to us, the company that is making the sale, so we can be able to collect. Okay, now it becomes a tedious process if we record every single entry as it happens. So a sales journal basically facilitates the posting of transactions. So instead of posting 50 or 100 transactions, depending on how many individual sales transactions you have, we create a summary, we create a sales journal, and from that journal we go ahead and we post the information to our ledgers. Okay, so when we have sales on account, the entries will look similar to what we have here. You will always debit your accounts receivable. So you are making a sale on account. Someone owes you money. Okay, when someone owes you money, we need to set up a receivable. We need to identify who owes us money. In this case, it's Lorenzo owes us money. Okay, we record the amount of the sale. Okay, how much did we sell the merchandise for? And then we collect the taxes. A reminder, the taxes is not money that belongs to us, the company. We're just doing the collection of it, and then at a specific point in time, we have to remit the sales taxes to the state. Okay, but we are responsible to collect sales taxes from our customers. Okay, so the entry whenever you have a sale on account will be the same. The only thing that will change is who you're making the sale for. So here we have Lorenzo, Myers, Walton, Katz, and Schwitzer. Okay, but the entries will always be the same. Okay, now if we were recording this in a regular process, you would have 1, 2, 3, 4, 5 separate entries to record these events that are happening during the month. Okay, now the sales journal facilitates that. Okay, it makes it a lot easier to keep the data organized and to record less entries. Okay, so once we do our journal entries in the journal, that needs to happen. Okay, we're going to go ahead and we're going to post or transfer that information to the ledgers. As you know, posting to the ledgers is tedious. Okay, the journal has to happen. You have to record every transaction. Now, once you get to the point of transferring it to the ledgers, instead of transferring so many transactions, we're going to get the summary of the total of all of these transactions and transfer the totals. Okay, so we're going to be preparing a sales journal. This is what it looks like. So it basically gives you the date of the transaction, who you sold the item to. It has the sales number, which is included in the description, the amount of the receivable, the amount of the sale, and the amount of the taxes. So it's kind of like a ledger that keeps track of all of your sales for that period that you're accounting for. Okay, so we have 5 transactions. They're listed here. What we do then is we get the totals for all of those 5 transactions. Okay, so instead of transferring individual transactions, we're going to be transferring to the ledgers the grand totals. Okay, so let's look at our general ledgers. Remember, a general ledger is a record that keeps track of the balance of each account. So every account has a general ledger. So the first thing we do is post to the journal. That does not change. Then we're going to create a sales journal, which is a summary of your entries that you have here. Then we're going to tally it up, get our totals. Okay, once we get our totals, we have 3 accounts being affected in this particular scenario. We have accounts receivable, sales tax payable, and sales. Okay, so we're going to pick up the grand totals. For examples, for my accounts receivable, I'm going to sum up all of my 5 transactions. I have a total of 5,418. I'm only going to do one entry for the total of 5,418. Okay, that way it minimizes, instead of doing 5 individual entries to accounts receivable, I'm only going to do one entry. Now, if you look at the post reference, I am obtaining this information from Sales Journal page 6. Okay, so this is my sales journal. It is page 6. Okay, so and then you tally up your ending balance. Remember, accounts receivable is an asset account with a normal balance of a debit. So if you have a debit ending balance plus a debit balance for this particular transaction, we're going to be adding them together. So my ending balance for my accounts receivable is 17,418. Okay, nothing changes. The only thing that changes is that you're picking up the total from the sales journal to avoid or to minimize doing 5 entries or whatever number of entries that you have for that period. You're just picking up the total. If you want to know what makes up that 5,418, you always refer to your sales journal 6. Okay, so we do the same thing. The 5 represents the step that we're working on. Step number 5 is transferring your totals to your ledgers. Okay, you're going to pick up your sales credit down here. We have a credit of 5,160 from Sales Journal 6. Remember, sales has a normal balance of a credit. Therefore, you're going to be adding your ending credit balance to your existing transaction for 5,160. And that's going to take your ending sales balance to 72,160. Then we're going to go ahead and we are going to bring in our taxes. Okay, same scenario. We bring it in from Sales Journal 6. The amount, remember, sales tax payable is a liability account with a normal balance of a credit. You need to know your normal balances. By now, you should know the normal balances of all of your accounts. Okay, it is critical. So the only thing that changes here is from your journal. You create your sales journal, which is a summary of all of the journal entries that you've done. You pick up the grand totals, and the grand totals is what is posted to your general ledgers. Okay, your debits must equal your credits at all time. So you see here I have a debit to my accounts receivable of 5,418. I have 2 credits, one for 5,160 to my sales account and $258 to my sales tax payable. So the sum of my credits is 5,418. In accounting, debits always equal credits. Okay, so this is a brief summary. Great examples are provided. Now we're going to actually apply what we've learned to an actual problem. Okay, so here we have a sales journal. Fury Ishanian owns a retail business and made the following sales during the month of August. There is a 6% sales tax on all sales. Then we have a whole bunch of transactions happening in the month of August. We are required to record the transactions in the sales journal starting with page 8. Total and verify the column totals and rule the columns. Okay, post from the sales journal to the general ledger. Okay, so in the real world, we are skipping a step here. Okay, we are skipping the step of where we post to our journal. Okay, that has to happen. The problem is not asking us to do that. The problem is asking us to post it directly to the sales journal, which we can do that as well. Okay, so that is what we're going to be doing. So let's start off with August the 1st. Okay, we're going to start off, we always start off in order when we do chronological order based by the date. Okay, the cell number is given of 213. Okay, whom are we making the sell to? It says here we're making a sell to Jeter Manufacturing. Okay, the post reference. Okay, we don't have the journal information, so this we'll fill out once we transfer to our ledgers. Okay, we're going to leave that blank for now. We will fill it in once we transfer to our ledgers. Okay, so my accounts receivable balance. Okay, so it says the sale was made for $1,300. Okay, we need to figure out how much Jeter Manufacturing owes me? Well, Jeter owes me $1,300 for the sale. Okay, that's the sales amount. Let me put these in commas, that way it's easier to read. Okay, so the sales amount is $1,300. That is what we sold in product. Okay, but we also have to collect a 6% tax. So we've got 1,300 times a 6% tax. That gives me a tax of $78. So on top of the 1,300, I have to collect $78 in taxes. So the total that Jeter Manufacturing owes me is the sales amount plus the taxes. Okay, so Jeter owes me $1,378. Okay, we're going to continue with August the 3rd. Okay, August the 3rd, we're going to have cell number 214. Okay, this is being sold to Hassan Company. Okay, and the amount of the sale is $2,600. The amount of the sale always goes under the sales credit. Okay, so we are selling $2,600. We're going to get our calculator out. 2,600 times 6% will give me taxes of $156. Okay, so I've got taxes of $156. So the amount I'm going to collect from Hassan is $2,756. That is my sales plus my taxes. Okay, we're going to continue with August the 7th. This is sales number 215. Okay, we made the sale to Habrock. Okay, I misspelled Habrock with an H. Habrock Incorporated. Okay, the amount of the sale is $1,700 plus sales tax. We have opened a new account for this customer. Okay, this is a brand new customer. This is the first time we use Habrock. Okay, so the amount of the sale is $1,700. Okay, we have taxes of 6%. So that's going to give me $102 of taxes. So the total that we're going to collect from Habrock is $1,802. That's your sales plus your taxes. Okay, so you see it's fairly straightforward. We're just filling in the table, the sales journal, with all of the sales transactions. Okay, this is 216. Okay, and this is to Seth Mowbray. Okay, we made a sale of $1,400. So we have to calculate the taxes. 1,400 times the tax rate in this problem is 6%. So that's $84 of taxes. Okay, so the sum of your sale plus the taxes gives me $1,484. Okay, that happened on the 11th. August the 18th, we have cell number 217. Let me capitalize Seth. Let me go back. Here we go. Okay, so 217, we sold it to Hassan Company. Okay, we made the sale for $3,960. Make sure you enter it in the right cells. This is the sales amount. We have to calculate taxes. $3,960 times 6%. That gives me $237.60. Okay, so we're going to enter that. Okay, so that gives me a total that Hassan owes me of $4,190. Okay, and this one's rounding. That's $197.60. Okay, so the sum of your sales plus your sales tax payable, and let me go ahead and make all of these two decimals. There we go. Okay, so that way we see the decimals. Here we have $237.60 of taxes, $3,960 of sales. That gives me a total of $4,197.60. That happened on the 18th. August the 22nd, we have sales number 218. We sold to Jeter Manufacturing. The amount of the sale is $2,800. We calculate the taxes. $2,800 times 6%. That gives me $168. Okay. So the sum that is owed, let me put the comma here. The amount that Jeter Manufacturing owes me is $2,968, $2,800 of the sale, and $168 of taxes. Okay. The last sale that we have is on August the 30th. Okay. August the 30th, we have sale number 219. Okay, to Seth Mowbray. The sale amount is $1,900. We're going to calculate the taxes. 1900 times 6%. That gives me $114. Okay. So the sum that is owed to me by Seth Monbray for this transaction is $2,014. Okay. These are all of the sales that I have in the month of August. Okay. Remember, the sales journal is a summary of all of your sales on account. These are only the people that have purchased from you on account. Okay. So now we're going to tally up our totals. We're going to go ahead and we're going to get totals for each of the columns. Okay. Okay, so I'm going to just do a sum of my rows for each of the individual columns so we can be able to get our grand totals. Okay. So these are my grand totals. I've got 16, and let me move this to include decimals. Here we go. So we have 16,599.60 that is owed to me. That's the amount on my accounts receivable. This is the amount I need to collect from the different customers that I've sold on account to. My sales credit, this is the amount of the sales of the actual merchandise, 15,660, and I have collected $939.60 in taxes. Okay. So now that I've done this, I need to transfer this information to my ledgers. Okay. Now, down here, to make it easy for me, I'm going to put the account number. My accounts receivable ledger is 122. Okay. Let me center this. Okay. That way I know where I need to transfer this information. I guess it's not working. Okay. So my sales credit, my sales transaction is account number 401. This is where I'm going to be posting it at. And then my sales tax payable account is 231. Okay. So these are the general ledger account numbers that I am going to be posting to. Okay. Now that I've done my sales journal, okay, I'm going to go ahead and I'm going to transfer the information over to my general ledgers. Okay. Okay, so now what we're going to do is we're going to start off with our accounts receivable. That is being posted on account number 122. So we're going to start off and we're going to pick up the last day of the month because this is for the month of August. Okay. So for the month of August, okay, the item field is left blank. Now, where am I getting this information from? This is coming from your sales journal, which is an S, page number 8. Okay. Now, the amount that I am moving to my ledger is a debit of $16,599.60. So I'm going to have $16,599.60. Now, in this problem, we don't have a beginning balance. If we did, we would just add to it. Since we don't have a beginning balance, I'm just going to transfer that to my ending balance. Okay. So that I've already transferred that into my ledger. Okay. Now I'm going to look at my sales tax payable. That's my next account that I have. That's account number 231. The date is August the 31st. Okay. Where am I posting this? I'm obtaining this information from my sales journal, page 8. For my sales tax payable, I've got a credit of $939.60. Okay, so I've got a credit of $939.60. I don't have any balance before this, so I'm going to go ahead and just carry that balance over to the credit balance of $939.60. Remember, these numbers are the ending balance of your account, okay? As of that specific point in time, your accounts receivable has a balance of $16,599.60, comprised of all of these transactions. You have sales tax payable. This is money you've collected for taxes on all of these transactions. And we're going to record the sales. Okay, so now we're going to record to account number 401. Okay, so I'm going to do August the 31st, the last day of the month. We always pick up the last day of the month. This is sales journal 8. And for my sales, I have a credit of $15,660. So I'm going to go ahead and I'm going to put it $15,660. Okay. So now these are my ledgers that have been updated with the ending balances on my sales journal. Okay. Now, Post reference. This is where we post, once we post it to our ledger, this is where we go back and we say what ledger did we post it to. When we do regular ledgers, we usually include the account number of the ledger. But in this particular case, we're posting to 3 different ledger accounts. Okay, I'm posting to my accounts receivable, I'm posting to my sales track, to my sales entry, and my sales tax payable. So I'm posting for each item 3 different transactions to 3 different accounts. On your post reference, all you're going to be entering on your sales journal is a check mark. Okay, that shows us that, you know what, we've posted that transaction to each of the ledgers that we were supposed to post it. Okay, it just gives us confidence, you know what, that we've transferred all of this information to our general ledgers. Okay, and the reason we don't include the account number, once again, is because we are posting it to 3 different accounts. Okay, to the 122, the 231, and the 401, because the journal has 3 different categories of entries. Okay, so here we are. Now, before I move forward, we need to make sure that we are in balance, right? We need to make sure that our debits equal our credits. I have one debit of $16,599.60, and I've got 2 credits, one for $15,660 and one for $939.60. The sum of my 2 credits equals the sum of my debit of $16,599.60. It is critical that your debits equal your credits. Okay, so we've posted the transactions from the sales journal to our ledger. Okay, that was part of step number 2, post from the sales journal to the ledger. And the last step that we have to do is we're going to have to transfer the information to our accounts receivable ledger. Step number 3, the last step that we're being asked to do. Okay, so I've already set up my accounts receivable ledger. This is basically a listing of all of the vendors that you have that owe you money. Okay, so you have a record of who the company, the address of the company, and we're going to update it with the amount of money that is owed to us. That way we can collect. Okay, when we sell an account, a big responsibility of us is to make sure that we collect timely. Okay, so we're going to be looking at our sales journal. Okay, I'm going to go ahead and I'm going to hide this for now, so I can look at my sales journal information right here. Okay, so I'm going to look at Hassan. Okay, so we're going to look at Hassan, and I am going to locate how many entries do I have for Hassan. Okay, we're going to work in order. Now these are in they're listed. Usually each of the vendors has an account number. In this case they don't, but this is a listing we're provided with. We're just going to transfer the information from your sales journal over to the ledger. So I'm going to highlight, that way we know what we are working on. So I'm looking at Hassan. I've got 2 entries for Hassan. Okay, so I'm just going to transfer that over. This is August the 3rd. Okay, for the item I'm going to leave it blank. This is coming from sales journal 8. And I have it, and this is an accounts receivable ledger. So we're going to be focusing on accounts receivable. That's what we're going to be focusing on right now. Okay, we're going to be focusing on our accounts receivable balance. So my accounts receivable balance for Hassan is $27.56. Okay, this is a debit. So we're going to put $27.56. So my balance is $27.56. Okay, let me put this with commas. There we are. And then on the 18th, on August the 18th, okay, we have sales journal 8 once again, and I've got a debit of $41.9760. Okay, so accounts receivable is an asset account with a normal balance of a debit. Okay, the balance should always be a debit, so I have a debit balance. So what do? We get the beginning balance of $2,756, and I'm going to add my transaction of $4,197.60. So my ending balance for Hassan is $69.5360. So now I know that Hassan owes me that amount of money. Okay, now I'm going to look at Habrak. Okay, we're going to see how many entries we have for Habrak. For Habrock, I only have one entry, so I'm going to bring that over. This is happening on August the 7th. This is Sales Journal 8. And the amount of my entry, remember we're only looking at accounts receivable, is 1802. So the balance for Habrock is 1802. Okay? So that is how much Habrock owes us, 1,802. Okay? Next we go to Jeter. Okay? For Jeter, we have one transaction and then we have another transaction. So we have two transactions for Jeter. So let's bring him in. So we have 8-1. This is sales journal number 8 and the amount is 1378. Okay? So that's going to be my balance. And then on August the 22nd, on sales journal number 8, let me put this in commas. Okay? And I have on the 22nd an entry for 2968. Remember, we're picking up the numbers from our accounts receivable. Okay? So now I'm going to tally it up. My beginning balance of 1378 plus this transaction gives me 4,346. So now I know that Jeter owes me 4,346. Okay? Last but not least, we've got Seth. There are two transactions for Seth. Okay, so we're going to highlight him. And I like to highlight, that way I know that I've used up all of my information. Okay, so I'm going to start off with August the 11th. Okay, this is sales journal number 8, and the amount on August the 11th is 1484. So I'm going to take that to my balance. And then on August the 30th, I have sales journal 8, and this is for 2014. So we add our prior balance plus the 2014 that we have for this one. Let me put this in commas. And my total is 3,498. Okay. So now this is, let me unhide this. Okay. So now the total on my accounts receivable, now I know if we look at our ledger, all we can tell from the ledger is that someone owes us $16,599.60 in receivables. But it doesn't tell me who owes me what. Okay? Now the accounts receivable ledger gives you that detail. Okay? So now we've broken it up between vendor. Okay? We have who we sold it to and how much each of these owes us. Okay? So if we tally up the total from my accounts receivable ledger, it should balance to that $16,599.60 on your general ledger for accounts receivable. So let's add it up. So for Hassan owes me $69.53.60. Habrock owes me $18.02. Jeter owes me $43.46. And Seth owes me $34.98. Okay? So the amount of my total receivables is $16,599.60, which is my balance on my general ledger for accounts receivable. So we're in balance. Just make sure that when you transfer the information, you make sure that after you've completed your accounts receivable ledger, the sum of your ending balances equals the sum of your general ledger balance for accounts receivable. Okay? So that is basically the problem. They're asking us to do three things. Create our sales journal, which we've done. We've recorded all of the transactions that happened during the month of August. After that, we transferred the totals from our sales journal to our general ledger. So our general ledger was updated with the grand totals for the three different accounts being affected. And once we finished that, we prepared our accounts receivable subsidiary ledger that gives me a summary breakdown by customer of how much they owe us money. Okay, so that way I can know when did they make the purchase, how long has it been, because we need to collect. Okay, the sum of your accounts receivable subsidiary ledgers, if you add the balances on all of those accounts, customer accounts, should tally up to your general ledger accounts receivable balance. Okay. So this is a very good problem because you get to practice your sales journal, your general ledger, and your accounts receivable ledger. Okay. Please make sure that you review the content in the chapter, the PowerPoints, 2 attempts are provided in your homework. I highly encourage that if you didn't do well on attempt number 1, you utilize attempt number 2. The highest grade is always retained. The more points you earn, the better, okay? Plus, you need the practice. Accounting is learned by doing. The more you do it, the better you're going to get at it, okay? So this is your homework for chapter 12. Please, if you have any questions or concerns, do not hesitate to reach out to me. Please review the course syllabus for my office hours. You can call me, stop by, message me, whatever works for you. I am here to assist you. Okay? Therefore, that is it for this lecture. I wish you the best of luck. Have a wonderful rest of your week. And until next time, bye-bye.